This episode is brought to you by Raymond James. For over 25 years, Raymond James has been helping Canadians achieve their financial goals. They are Canada's largest independent financial services firm with over 520 dedicated advisors. They've got $88 billion in assets under management and capital market services. With no proprietary product to push, their advisors are free to focus on the unique needs of their clients. Now, whether you're saving for your children's education, preparing for retirement, or safeguarding wealth for future generations, Raymond James is committed to guiding you every step of the way. Visit raymondjames.ca today to discover how you can live a life well planned.
Hey everyone, welcome to a brand new episode of In the Money with Amber Kanwar. As you can see, I am live on location in Calgary, courtesy of ATB for letting us use their studio. And in this episode, I'm going to be speaking with Bob Dhillon. No, not the musician, but the head of Mainstreet Equity. He has quietly built one of the largest real estate owners in Western Canada. And boy, does he have the stock performance to back it up. The stock is up more than 4,000% since he went public more than 25 years ago. But as Bob says, he's just getting started. Let's get into it.
The information provided in this podcast is for informational purposes only and does not constitute financial, investment, or professional advice. The views expressed by the host and the guests are their own and do not necessarily reflect the opinions of any organization or company. The host and guests may maintain positions in any securities discussed on the podcast. Always consult a qualified financial advisor or professional before making any investment decisions. Thank you to our partners at ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information.
Bob, thank you so much for joining me.
It's a pleasure.
You know, when I tell people I'm going to interview Bob Dhillon, maybe in Ontario, they're like, oh my God, the singer. And in Calgary, everybody knows which Bob Dhillon I'm talking about. And I'm a Punjabi girl, just like you're a Punjabi boy. So I know that Bob's not the real name.
Yeah. So you want to ask me how I got Bob Dhillon?
Yeah.
Well, in grade 8 and 9, I was a great guitar player, and I used to play Bob Dylan songs. So the name stuck in high school, and how it continued onwards is I grew up in an era of with the culture and the fabric of Canada was changing rapidly, and there was a lot of racism. I had to, unfortunately, anglicize my name. So that's why it became, but I didn't pick Bob Dhillon. I was nicknamed Bob Dhillon because of my guitar skills, which I've lost, because all I do is live and breathe real estate. And but then if I was going to choose a name, I picked Bob.
Well, it does suit you, but that's so interesting about the origin story about, overcoming that kind of racial bias, because I would say we're in a time now where I don't know that that's so much in the rear view. What do you think about that?
Well, I have two ways to answer it. Racism, Canada's the best place in the world. I love Canada. Canada's home. It's given me lots of opportunities here, and I wouldn't trade Canada for the world. Now, it's closest thing to perfection. But perfection takes a while. It's like these sushi chefs in India. It takes them 10 years to perfect making sushi. It may take a decade or a generation, but then we'll have a perfect utopia if we don't go socialist.
And it sounds like, it's funny that you mentioned sushi, because I know, you're Indian, but you were born in Japan. You have kind of this wild origin story that, how does a guy who's born in Japan, who is Indian, end up in Calgary building real estate? Like, what's the shorthand of that story?
If you look at the history of the Sikhs, right? The original gypsies 2,000 years ago in Romania, if you do the DNA, they come from the same DNA as you and me. So we are gypsies, original gypsies, and we float all around the world wherever the opportunity is. My great-grandfather died in Canada in 1908. My grandfather was raised in Hong Kong. My dad was raised in Hong Kong, and I was born in Japan. There were traders in Pacific Rim before the age of internet and big multinationals who were moving things around. Those days it was connections, your wits and smartness, and traders were all in that whole Pacific region. Even today, were byproduct of Northwest India. We were in Liberia, West Africa, was another trading post, the family trading post. Civil War broke out. Trudeau Sr. opened up the gates, and during that era, a lot of Sikhs migrated to Canada, Punjabis, Indians, the world migrated to Canada. And then Trudeau Jr. opened the gates again, and another block of people came. So it was a journey from Pacific Rim, Liberia, West Africa. Civil War broke out in Liberia, and we migrated to Canada.
I think that's interesting to use that historical context because you're a product of that first wave of immigration.
My parents were.
Under Trudeau Sr. And now, as you said, there was a second wave, and I find a lot of people complaining about it.
They complained when the first wave came too. It's the same story. It takes a while for immigrants to come in and adjust. And all these immigrants that are complaining are Uber drivers, and they deliver skip the dishes, are going to be the new merchant classes of Canada. And so they are going to find a way to create GDP economy, and it'll be job creators like the way from the 70s who came here and they did the same.
Well, let's use you as an example. So you're a child of immigrants to Canada, and now you sit atop $1 billion real estate empire.
3.6 billion
in terms of assets, but not what the market is giving you credit for.
Market cap is close to 2 billion.
It's close to 2 billion. Okay, who's counting, right? I know I left out a whole billion.
You know why that's important?
Tell me.
Or you want to go back to immigrants? Why that's important is once you hit 2 billion. Yesterday, there was a fund from Salt Lake City came to hear my story. Salt Lake City. And they came specifically to see Mainstreet. Reason being, you've hit 2 billion and you kind of looked into Bloomberg, and you're kind of a unique company, and they've got some algorithms, charts that show that this is a company I want to fly from Salt Lake City to come. So before we kind of at the cusp of launching.
No, I think that's important. And actually, Jordan Zinberg, who's at Bedford Capital and is one of your shareholders, made that point that one of the advantages of investing in small cap stocks is you can get in early before these Salt Lake funds, you start to get on their radar. And the journey to 2 billion didn't happen overnight. It happened over 25 years. I want to talk about the first entrance into real estate. What did that look like for you?
First wave of immigrants, growing up in Canada, it's tough to get a job. You're forced into being an entrepreneur. So I became a house flipper at a very young age, started flipping homes right through education, MBA from Ivy, Western. And I was flipping real estate. And then I realized one day that there's a gap in the marketplace.
Hold on. How old are you when you're flipping real estate?
19.
19?
Yeah. Had no choice. Do you know, sometimes new immigrants are forced into being entrepreneurs. So some of them buy liquor stores, Subway, trucking, and house building, and all the merchant class. There's a reason that they're immigrants. Then their kids will become portfolio managers, and the parents will sell it off.
And they'll invest in companies like you. So you're 19, you start flipping these homes, and I guess you saw immediate success?
Yeah, I was lucky. I hit a home run in my first 2 houses that I flipped. It was like $18,000. It was all the money in the world. Guess what I did with that?
What? I
bought a Mercedes. But, typical Sikh thing to do. 190D, they just came out this compact one. But to be honest, I doubled down since the 19,000. 19,000 to 3.7 billion has been a doubling down. I never took any money off the table.
It's very funny that you say I bought a Mercedes, because I think when people like Mainstreet Equity, that's sort of the opposite of what you're known for, is you often take your money and you reinvest it. Was that the only time that you kind of splurged? Or what did you learn from that lesson of like taking your winnings and splurging?
You're young and stupid. You want to flex You want to tell the world that I'm on the word, fake it till you make it. You can use any line you want, but that's the stage I was hanging around Calgary with a 190D, then went into 450 SL, then 560 SL. And then once you started doing well, you went underground. You don't want anybody to know.
Real estate is a hot topic for many Canadians, but there's more to real estate than just owning a home or a rental property. Public REITs can offer diversification and can be great for the income-focused investor. Plus, a rebound in M&A activity in Canada is driving prices higher. Middlefield is no stranger to the sector. The company was built on real estate over 45 years ago and started investing in REITs when they came online in the mid-90s. This experience is reflected in its 5-star Morningstar rated real estate funds. Learn more at middlefield.com or ask your financial advisor about Middlefield's real estate funds today.
Talk to me about founding Mainstreet Equity and the core principles. Like what was the idea? Because it's still very much alive and well. What were you going to do in real estate that nobody else was doing?
When I went public, 2000 TSX, the market was full of corps. This was before the era of the REITs. And so there was multiple companies. Some guy was building homes, some was a land developer. And the new phenomena came out called the REITs. They were like alien race. And the profile of a lot of the corps were family. But real estate, let me rewind the clock a bit. So the history of real estate, and I know that's a generalized word, was in the hands of family offices, rich individual, and some small funds. That was the concentration. And the transition went from individuals, family offices, and funds, small funds, into REITs. And that transition happened in the year 2000. So what was different in the REITs is you were dealing with a shark who's a real estate guy who's, smart, and he built a small portfolio, and a financial engineer. This makes sense. He bought a ton of real estate, went back to the market, bought some more real estate, kept raising capital, and it was like never ending. It was gobbling up.
And giving returns, paying it all out through dividends.
Paying it all out, kept raising the money.
Which is why investors love REITs. If they're attached to them, you think about, it's all about that dividend.
Yeah, it was a whole retail product that was created by Bay Street, the bankers. I think it was globally, the REIT market was theirs.
But you don't follow that model.
No, and I'll tell you the Mainstreet. So I went public. So the real estate index was in control of smart people, and it switched to financial engineers. And so I was the last guy standing as a corp. But I had a unique model, and unique model is mid-market, add value, Western Canada. Why Western Canada? First of all, I'm in the apartment building business, affordable housing, average rent $1,200. Western Canada, because all the capital is floating around Quebec and Ontario and Toronto. Family offices, funds, REITs, etc. So there's less competition in Western Canada. Mid-market, 80% of the total supply of apartments are smaller in size. They have 40 to 70, 80 units. And the institutional capital, those REITs I was telling you about, are focused on the 20%, right? So lesser competition. Western Canada, mid-market, then add value. Now, most people wouldn't know this, that most people do not know a whole universe is 40 to 70 years old.
The buildings that you buy.
Buildings are all like, I'm a plastic surgeon. I buy these buildings, I go fix them up and I make them look pretty and increase the top line revenue. They're 40 to 70 years old. The reason they're 40 to 70 years old is to produce a new product. It costs you roughly $400,000 to build a brand new unit. To justify a developer to build it at $400,000, you need $3,000 rents. But 60% of all Canadians make less than $50,000. So they can't afford $3,000 rents. So I'm in the mid-market, Walmart, add value, Western Canada.
And I want to underline that point because real estate can be cyclical. What are interest rates doing? What's the immigration? And have you ever had a down year in growth?
If you believe in your product, and real estate's a long cycle game, and you continue to add value, and you're creating a brand, and your competition is fragmented mom and pop, what we do in the down cycle is we double down. If COVID happens, interest rates drop, we went aggressive on long-term financing with, we did some deals at 1.5%, 10-year money, 1.56%.
So then you buy assets.
Yeah. Oil prices went down. ESG was beating up on Alberta. We doubled down on Alberta. Now there's no bids in BC secondary markets. We are doubling down in BC. So when nobody cared about Saskatchewan, this is probably the richest province in the world. We were buying Saskatchewan at $20,000 a door when the replacement cost is $400.
Because it's easy to follow the new shiny thing. You've stayed core to that principle for 25 years when Alberta's hot, when the West is hot, and when the West is not.
Simple model. Since the caveman days, accommodation is a necessity. 2, on risk management, supply is constant, demand is compounding year after year.
So, and now how many units do you have, or how many buildings you've built this to?
We have 18,635 units, $400 million in liquidity, $10 FFO per share.
Funds from operation.
Are, can I pick up my piece of paper? Give me some data.
Yeah, give us the stats.
Yeah. 25 years of non-dilutive organic growth. I think that's an important point
Which basically just means you never went to the market and asked for money.
That's right. If I did go to the market every year, every Bay Street bank would have research on me. Because I don't pay the street, I don't get any research. 14 consecutive quarters of double-digit returns. Our revenues are $270 million, NOI's $168, FFO's $10 a share, which is $90 million, 18,683 suites, $3.6 billion, 23 different operating platform, average rent $1,200. 12% of our portfolio is unstabilized. That means there's upside on same-store NOI basis. Lots of liquidity with additional clear title assets. Now, where we are always, we got a label of being an Alberta company, but 43% of our net asset value of BC, and we have great long-term CMHC debt.
And so that's great perspective on how diverse you have become within the West. I'm sure you get the question though, like, all right, was this a little bit of low-hanging fruit? You caught a market that was, for 25 years, but that, people had ignored. But at some point, these places start to boom. How much runway do you have to keep doing this model? Do you feel like you're running out of runway?
The low-hanging fruit was backed by strategy, and I saw this a long time ago. Like I said, mid-market, add value, Western Canada. The runway is a macro thesis. The macro thesis is we're trading significantly below replacement cost, approximately 40% of replacement cost. Till we hit 70, 80% of replacement cost, till wages go up and people can afford renting new suites and they'll pay up for it. Till that happens, my runway is 40 to 80% of 40, 70, 80% of replacement cost.
For those that aren't familiar with what replacement cost means, can you simplify, what does that mean?
Yeah, so a developer goes out there and builds a building.
Yeah.
It's going to cost you $400,000 a door to build. Last month, we bought a building in Red Deer outside of Calgary for $85,000. So you're not going to be able to create new supply till rents go up considerably. So rents got to double or more than double before new supply comes. Now, if there's demand for something, like during COVID, you just manufacture more masks. You can manufacture more apartment buildings till rents go up. Till then, you've got pretty much the audience captive.
So you've talked a lot about Alberta, Saskatchewan, and BC being a big part of your footprint. What about Manitoba, Winnipeg?
I love Winnipeg. Winnipeg is one of these unique markets where everybody kind of flies over. It's truly the center of Canada. And Winnipeg has had a very steady, eddy, strong growth cycle. It doesn't have the boom-bust cycle. So I've just entered into the Winnipeg market right now. I love it. There's an interesting case study on Winnipeg. Why people flew over Winnipeg versus came right to Alberta. It was a tough market to break into. It was very consolidated by old families, lots of money, because a center, you had Montreal, Toronto, and Winnipeg as a center of Canadian commerce in the early 1900s. And the same families have consolidated and have a very strong position. Now, 100 years later, their great-grandchildren want to have a guitar and a yacht. and they're floating around in South Beach, Miami, and they don't want to own apartment buildings and create and improve the life of middle-class Canadians. And that's what we do.
So you recently went in there, and again, I guess you're just alone in there. There's no competition for those assets.
Other than the existing families, correct.
For a decade, the Murray Wealth Group has been dedicated to disciplined, long-term investing. The result? Their Global Equity Growth Fund boasts an impressive 14% compound return since inception, and they're proud to celebrate their 10-year anniversary of building wealth for investors across Canada. Discover how the Murray Wealth Group can work for you by visiting murraywealthgroup.com. World-class investing, wealth built together.
Did you ever think about moving east to the Ontario market, to Quebec markets?
Yes, we had a portfolio in Toronto, and we sold out because the prices went crazy and it was the right timing. And we allocated those proceeds and lower hanging fruit. And I tell you, there's other reasons. Toronto had a lot of money. Again, funds, REITs, family offices, rich guys. You try to make a bid, you're competing with 100 other guys. And Western Canada, I was Bob Dhillon.
That's so fascinating. So you take advantage of just like this white space, and that feels like a theme in Calgary. The people who are making money here, they're sort of saying the strategy out in the open. This is my strategy, and nobody kind of comes along for the ride. Why do you think that is? And do you think that's changing?
I don't know what's happened. This is a social issue in Canada. I think in the last 15 years, I don't know if it's aging demographics, I think we've lost a lot of entrepreneurial spirit and entrepreneurs. Maybe they all say, I'd rather be an app manufacturer, building apps, or become a portfolio manager, or want to be a day trader. I don't want to go out there and build widgets and build factories and whatever. And so I see that in every field where there's a lot of entrepreneurial opportunities in Canada, and this seems to be a real vacuum.
Is policy at fault? Is it difficult? Have we created the right conditions in Canada to be successful? Could you do what you're doing if you started today?
I think being an entrepreneur should be cherished like a hockey player. And, I think it's a good thing to make a buck. Like, don't be scared. Like, one thing U.S. has over us is their ability. It's a good thing to be rich. It's a good thing to be an entrepreneur. There's nothing wrong with being an entrepreneur and creating things. I think we did subconsciously a social suppression of being free. I don't know if maybe I'm overreading it. Alberta's different. Alberta, Saskatchewan is still free enterprise. Yes, I can do it. But I think the rest of Canada is, we have, and also the safety net too, right? We've created a safety net where you don't need to be an entrepreneur. You just sit home and collect money.
You can't say that's a bad thing. That's helpful to people to have healthcare, to not have to worry. That is productivity in some ways. Maybe it's gone egregious in other areas, but it's nice not to go into debt just because you have a cough.
We can be both. We can be socialist and capitalist. We can have a social net protecting healthcare, education, all the other things that socialism provide. But also, you cannot suppress the capitalists. You got to let them loose.
It seems like we're in a moment, this conversation, where maybe if for the last 10 years, executives felt unheard. There's a newish prime minister, and we're under attack by the United States, our closest trading partner, in terms of, the comforts that we had with the U.S. What kind of conversation, because I know you're very politically connected, Bob Dhillon, what kind of conversations are you having around that?
I hear different conversations, and some of the conversations are very unique. During Stampede Week, I've heard that Donald Trump has done, this is somebody telling me, President Trump has done us a big favor. Basically, wake up and like interprovincial trade barrier, opening up trade with UK and unleash the energy corridor, right? Which is, I think, the magic if you want to have healthcare, education, all the socialist things everybody in Ontario and Quebec want. You got to unleash the Western energy corridor. So I think he's some thoughts are that he's done us a favor. Short-term pain for long-term gain. I don't know what the outcome of this trade wars is going to be, but it's a wake-up call for us.
And do you see action? Do you think we really will get a change? And what would you call for? What would your recommendations be?
I think we are the richest country in the world. We got the infrastructure. The greatest people on this planet Earth are Canadian, educated, hardworking, skilled. Let them loose.
I want to talk about your outlook for real estate in general. If you think about it at all, you've made your fortunes in Western Canada. You were in Ontario, in the Toronto market. But I wonder if you take a peek over there once in a while, especially right now where it seems like condo investors in particular are in a bad way. What do you think is going on and how do you think that plays out?
I think it's a great opportunity for an entrepreneur to go out there and buy condos which are trading significantly below replacement cost.
Why don't you do it?
I'm thinking about it, right? I'm thinking about it, but I still want to see how this tariffs, auto, steel plays out.
I guess you would be qualified as a small cap, even though you've got that more than $1 billion market value.
$2 billion.
$2 billion market value.
Close to $2 billion.
Close to $2 billion. Your stock since 2000 is up more than 4,000%. And for perspective, the TSX is, I think, only up about 380% over that time. So it's been a massive outperformance. And you actually mentioned, you only have coverage by two banks. Part of you must have to think about, like, how do we enrich the capital market so that there is that layer of financing available for upstarts, like yourself?
Going back to your original question, what has happened to the entrepreneurial spirit? That's one of the issues is what created Silicon Valley. It wasn't the weather. It's the ability to raise capital. Angel investors, funds, people willing to invest and take risk. Same thing happened in Calgary in the 70s and 80s, and you call them wildcatters. They were big ability to raise money here. I think that has become too concentrated and consolidated, and risk appetite is no longer there. And if you don't have risk capital, and if you have willing people, you're going to lose the entrepreneurs to the U.S.
And I guess the willingness to go against the grain. As you said, you're kind of the only corp standing in real estate.
What is that number? 4,000% return?
Yeah. You don't know?
No, I don't know.
It's since 2000, 4,376%.
I'm a thoroughbred with blinders on, and I'm running every day and trying to create value for my shareholders. I'm not looking at my Bloomberg ticker, see what the stock price is doing.
I'm sure shareholders do, and they're grateful for kind of the long-term returns. I wonder if you ever faced pressure, and I know you've recently instituted a small dividend, but I wonder if you've ever faced pressure over these 25 years. Like, why don't you just be a REIT?
Because I believe in the model. I believe there's a gap in the marketplace. I see I can rinse and repeat and create a reoccurring cash flow model. And actually, I was criticized for having implemented the dividend. He says, you're hitting double-digit returns quarter after quarter. I don't want my money back from you.
So why'd you do it?
To broaden my shareholder base, create more liquidity, more volume, and to, like all these value investors.
But it's not the start of something new.
No, I wanted to compete with, there was all these funds that couldn't buy my stock. And they said, listen, just implement a small dividend. So it's insignificant. It's out of my free cash flow, where it's like, I don't know what the number is. It's insignificant. It doesn't affect my growth. Yeah. But I was criticized for it.
Like on the other side, that people said, why are you going to do it?
But it did create another slew of shareholder base. And
you own about 50% of Mainstreet?
Close to it, but not exactly 50.
You've never sold, is that right?
Never sold one share.
How do you, why? you could be on a yacht somewhere. Some people say after 25 years, that's nice. Pick up that guitar again.
Because the party's not over yet on consolidating the mid-market Western Canada's add value space. And I think we have just got started. And another thing is, you know what? I enjoy this. This is fun. I started Mainstreet for the trunk of my car and a cellular phone and no money and no respect. And now we got the deal flow, we get the respect from ATB, and we're achieving some modest success. So I think we have opportunities that exist today that didn't exist when I started. Infrastructure, close to 800 people on payroll. Their livelihood depends on us.
Bob, thank you so much for joining us. Fascinating conversation.